What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We've got Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. Although we did have a shortened trading week due to the holiday on Monday, we had some interesting things happen in terms of where our daily charts went, at least in the indexes. So we're going to talk about that and more. But as always, before we get into the video, all of our free resources are linked down below in the description. So I'd encourage you to check that out. Without further ado, let's hop in. Moving right into our SPY weekly chart. First thing to point out, of course, is going to be the location and structure of this week's candle. So we have the structure being an inverted hammer candle, larger upper wick, smaller body, smaller lower wick, indicating to us that there are some serious sellers hanging out in that upper portion of the wick. We're talking about that candle right there, of course. So the next thing, the location of this candle, where is it happening? It's exactly on the retest, back test, of our support trend line, which is now broken through price action, right? It's one thing to break a trend line through sideways action and time, and it's one thing to break it to the downside with some serious price action, and that's what we saw, which is generally seen as more of a bearish break than a break sideways through time, right? So that is one thing to be watching out for, and we'll talk about on the daily time frame why it was so important that we couldn't get back above that support trend line with some internals. But anyways, in terms of volume checking in down there, on any sort of moves to the downside, it's generally normal to see volume increased. And lastly, I did want to bring out the Fibonacci's in terms of looking at the retracement that we've seen so far off of our most recent move. So I know a lot of lines to look at right now, but the only things I want you to focus on are first the 38.2. That's exactly where we saw a low in last week's candle. So interesting and noteworthy that we went right to it and bounced. The next one up is generally the 50% retracement, or halfback, if you will, when you break and close below that 38.2, which we did do this week. So we're looking for a bit of a larger move to the downside to see that 50% retracement. And what you'll also notice is that our blue line there is coinciding with some yellow lines, indicating that we have a gap in that area. So look for some pretty strong support to come in right around this level. Of course, we'll talk about it more on the daily. So before we talk about levels, this is just what I wanted to point out in terms of internals and why it was so noteworthy that we could not close back above our support trend line, and the back test was so important. If we look at the internals for Wednesday, it's going to be this day right here. You'll see that all of our advanced decliners were way up at 1,500 and 2,000, which is a really bullish reading. On any sort of down day or neutral day, you see them sort of do something like this or hang out down here on a red day. But most importantly, look at our ticks down here. Specifically, our cumulative tick was a very, very strong build to the upside, that triangle that I just drew in right there. On a down day, you normally see something like this. That's sort of standard, but we had a tick, a green tick, up or above our 5,000 mark, which is extremely, extremely bullish. So the fact that the bulls really tried, they put in an extreme amount of effort to get back above our support trend line there on Wednesday, and it didn't happen, is really noteworthy because all of that effort was put in to no avail. So now, we could see a potential move lower here. I'm not saying that, this is make or break all, but it's something I did want you guys to be aware about, that the backtest was a huge failure for the bulls. But anyways, talking about levels now and structure, we came right to our 50 SMA and top of our gap there at 331.15. Did print a hammer candle on Friday's action, so whether or not that was short covering into the weekend, we'll have to wait and see. But if it does produce any sort of bounce, our upside targets are going to be first battling up through this level, 335.72. Then this is the next, really major one that I want you to be paying attention to, and you all should have on your charts. That's 339.08. That's our previous all-time high before we set this new one up here. That will be a definite battlegrounds for the bulls and the bears. And the next one is going to be our triple top that we put in this week up at 342.50. We did form sort of a balance and consolidation zone. So if we break it, look for, of course, a doubling to the upside or a doubling to the downside. We talked about that 50% retracement being somewhere in this general area of the chart. So it's slightly below. I would watch for that support to come into play first on any sort of gap fill. Of course, let's just cover them. We have 331.15 to 330.11. So first gap is there. Second gap is down below, 327.75 to 326.61, and then anything underneath. Of course, that doubling effect could give us a target somewhere in the middle, but really our next key support and target below is going to be this one in here at 319.50. So jumping over to the Qs and leaving it slightly zoomed out for now, I do want to draw in our Fibonacci's from the very low of this move happening from down here, since really we haven't seen any meaningful pullback yet until this week. So Looking at the Fibonacci's, you can see that our 38.2 retracement is still very far below us, all the way down around 250.50. So price could fall, continue to fall here and go lower, and we would still be in quite a healthy uptrend, just seeing more of a pullback. It's obviously going to be more extreme because we're looking at a larger move here in the Qs, but when you see a large move like this, generally it has to be corrected and, pulled back and consolidated for quite some time. So we can either go to the 38.2 or consolidate and sort of dribble sideways and do something like this, and that would do as well instead of going straight down to this level. So those are the two scenarios in a longer term picture that could potentially, keep things bullish here on the Qs. Of course, we talked about the break of the 38.2 giving us the 50%, but really, if we look at the previous all-time high in here at 237.47, we're still very far above that. So nothing really to worry about in terms of getting back down below that level and pre-drop, highs, if you will. So things all good there. In terms of levels to be watching for this week, again, just like SPY, we have more of a hammer candle printing on Friday. We'll have to wait and see if that's just short covering into the weekend or really, buyers buying this 50 SMA dip to the downside if it isn't a buying of the dip, if you will. Lower levels are first going to be here at 268.34, 264.71, 260.89, and then 256.54. I know it seems like a lot, but look at the ranges that we've seen this past week, or really the drop week, if you will. It definitely could be all of those levels in play. To the upside, though, if we get a bounce, and this is more than just short covering, people buying this 50 SMA dip, then of course looking out above, first resistance here, 274.75. This next one, of course, acting as a little bit of a double top on Tuesday and Wednesday there at 278.50. And then, of course, our high from Thursday, right around 282.50. We can really just rattle these off walking up the ladder. So I'll leave it to you to sort of, go as high or as low as marking off the levels on your chart as you'd like. But just keep in mind that on some serious selling like this, the range and, levels that we could potentially move are greatly increased. And last but not least, checking in on IWM Russell 2000 and our small caps. Very interesting here that we're just now breaking our support trend line. So all of our other support trend lines are broken in a major way to the downside, whereas IWM, our secondary support trend line that we drew in last week, is just now starting to fail. But we are sort of at a horizontal support as well here at 149 the whole dollar. So we'll see if we can hang on to that level. If we do, we will have to battle back up through that 50 SMA. You can see it offered some resistance on Friday's action. It'll be just above around 150.75, 151, depending on time of week and when that happens. But that'll also coincide with a back test, a retest of our now broken support trend line. So if the same thing happens as what's happened on SPY and the Qs, we might get a little rejection there and then continue lower. To the downside, levels are going to be here at 146.87. Then our 200 SMA should provide a first touch bounce and start to coincide with our 145, anything underneath. And we have our triple tops or multiple tops happening in here at 142. To the upside, if we regain and recapture that 50 SMA and the support trend line, next clear target above is going to be this one here at 153.37, and then sort of this chop zone in here around 156.23. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. So checking in on Apple, we have a bit of a double bottom that's forming here at 110.17. Those don't normally hold and are the improper end to any sort of auction. So you can see that most auctions end on a bang and then they sort of go to the downside or reverse in some way out of that level. So if that double bottom doesn't hold, we have targets below first the 50 SMA on the daily time frame that's hovering right around 108. Then we have a gap to be filled below us between 107.92 and 106.23. Anything underneath that, and again, expect some chop in this general area of the chart as people defend their gap up earnings positions. If they bought that sort of gap up there, then they probably want to keep their positions afloat here. But anything under our $100.93, look for the gap fill down to 96.31. To the upside, though, if this hammer sort of results in what we would call buying the 50 SMA on the daily, then we have levels to battle back up through. First one's going to be this key chop zone or resistance, then turns to support. You can see that's there at 113.69. Anything above, next one is there. 116, and then here our double top from on Tuesday, Wednesday at 119 the whole dollar. So leaving Netflix slightly zoomed out here so you can see where the support trend line is coming from. But anyways, we have a double bottom that's formed after a break of that support trend line. So we have an upper wick that is rejecting a body that's closed fully below that support trend line on Friday. So if this double bottom breaks, we're going to our next one, which is going to be this double bottom here at 467.07. just round that to the whole dollar. But anything underneath that, you can tell there's quite a ways to go till we really come into our next firm support target to the downside. That's at 427.82. Again, a lot of support in this general area of the chart. We had the 50 SMA sort of in here. We had horizontal support, trendline support, and it all looks like it's starting to give to the downside. So if this all starts to break, again, keep in mind that there is a decent room or amount of way that Netflix could fall to the downside. But to the upside, if we recapture that level, of course, we will have to battle back up through this key resistance point here at 496.66. Anything above our next sort of piece up here is going to be at 510.84. And just to give you a little bit of context here, this is a complete failure of this large move to the upside and some. So it really looks like the bulls and all this volume that came into the stock there on that large breakout day has all been negated to the downside. So it's noteworthy that we couldn't even get back up to that all-time high after this really big surge. So could be a little bit of a lower high here and start to form a resistance trend line, something like that. We won't get into it until we see some more price action develop, but that's a longer term view of Netflix. Jumping over to Tesla, it's actually establishing some value higher as opposed to our indexes and some other stocks that have established value lower, right? We have 2 days that have now closed higher than our Tuesday and Wednesday sessions, which is noteworthy. We did get rejected up here at our 393.90 or 340, 400, whatever you want to call it level. Probably 400, the nice psychological round one. And now have closed lower. But again, these lower wicks are indicating that people are still buying it down at these levels. So if we see continuation to the upside, first have to battle through that 400 psychological, we'll call it. Anything above that, and we're going back up to 426.23. And then after that, this was a key 30-minute level, if you remember, in some weeks prior. At 463.35. That's quite a ways to the upside, but again, with Tesla, anything can sort of happen here. To the downside, if the double bottom breaks there from Thursday and Friday, which just to give you an idea of that price level, it's at 360.69. If that gives, then look for a move down here, again, back to our 50 SMA, which again might provide an intraday bounce, but normally on the second touch on the daily time frame, you're looking at a break of that, right? So bounce the first time and then break the second, in which case, if we go lower than our 335.08, you can tell there's really not much structure in here. There's one level we could be missing, which we'll put in, which is going to be this previous resistance, which could offer some support at 306.25. Anything underneath, and we have the 293.73. So Alibaba is doing the same thing as Netflix, but what you'll notice is instead of closing below that body of the Friday's candle below our support trend line, it's actually still above. So buyers did step up and buy this previous breakout level in here. It looks like we are forming some pretty solid support based on some of these lower wicks and the fact that we've bounced out of it multiple times now. So 268.07 to 265.69. Basically, this previous breakout level is going to be the key line in the sand on BABA. If we can maintain and hold above it, look for a move back up to retest some of our resistance in this area at 283.76. Anything above that, 292.33. To the downside, though, if this previous breakout level doesn't hold and it breaks, look for that 50 SMA touch on the daily time frame. First touch is always going to be at least an intraday bounce, but anything underneath, we have some levels to look at. We have 257.73, first one there, anything underneath. And again, remember, it was just very choppy in here, but some of our key lows are going to be next up at 252.01, and then I'd just call it 250, the psychological number as well. So Facebook still remains in its uptrend. Again, the support trend line has been striken from some of the lows way back here. Looking, you can see it a little clearer now, but also coinciding with our 50 SMA here. So if we do get into it, I would expect some sort of bounce out of this level. It's a key support. It's held for a very, very long time, and the 50 SMA will provide a super support there, as well as some horizontal levels. So keep all that in mind. If we do continue lower here on Facebook, there's really strong support. It looks like right around our 260 level. So 260 is probably a buy on Facebook for at least some sort of bounce. All of our targets above are sort of mapped out for us. There's quite a few in here. I'm just going to get rid of some of them that look to hold less import, if you will. That one sort of was the one. So anyways, if we continue higher out of that 260, then we have targets above here at 269.83. You can see that it sort of offered some support, and then rejection there on Friday. Above that, triple top, and then some previous highs in here at 278.97. Anything above is going to be our set of lows from in here at 291.72. That's quite a ways away to the upside. To the downside, though, if we break our 260 level and continue lower, you can see there's really some room to run, just like in Netflix. Not a lot happening in between there and our next level below 250 or 247.16. Watch out for that psychological pressure to buy slightly before, but it could ultimately come down to that 247 based on our previous resistance and then newfound support. So watch out for that on the break. Moving over to NVDA, if you will. Again, our support trend line so strong. It's been in place for quite some time. 50 SMA is starting to coincide with it. So I would say this area in here, right around 467, 468, is definitely a buy, at least for some sort of small bounce out of that area of the chart on NVIDIA. Look for targets up above at 503.17 to up here at 513.73, maybe even our high of Thursday in there as well. Anything above, if we get some really strong rally out of that support trend line in 50 SMA, 554.80 is going to be our next key resistance, and of course the all-time high is way up there. But if we break here at this 467 or 468 whole dollar, look for a move, of course, to our 50 SMA. We've talked about that and how that's always a first touch bounce, at least intraday. Anything underneath for 54.81, and then next support is going to really be, I would just call it this breakout area in here around 421, the whole dollar, or 432. It's certainly going to act as a little bit of support, but there's way more data points down here at 421. So Microsoft looking more like our indexes, at least SPY anyways, on the strong rejection back above our support trend line. Very similar pattern happening here, again with the double bottom. Not really the finish or finale of a move that you like to see. So it looks like we could potentially see lower again here in Microsoft if the double bottom breaks at 202.16, in which case next support is going to be down here below at 193.89. Anything underneath, and again, 200 SMA might actually be in play on this one. If that steadily continues to rise, 186.72 could coincide with that level. To the upside, if this does, though, result in some bounce based on our lower wick there, we first have to battle back up through 208.02. Anything above, we have our 211 resistance, and 50 SMA should provide some strong resistance, and then a double top here, which we should mark in at 214.60. Anything above that, again, very strong resistant area of the chart up here, actually, based on our previous breakout level there. That's around 216.39. And then we have some hairy levels, which we should definitely clean up here and here. Next key one that we really just want to be watching for is going to be up around 224.64. Again, that's quite a ways to the upside. We would have to recapture our support trend line. And last but not least, our beast is going to be Amazon. And you can see here that we actually have a lower low on Friday, right to a key level of support than what we have in the rest of our indexes, right? The indexes have equal lows, kind of something like that. SPY has that wick to the downside, but our companies anyways, most of them have equal lows. This actually has a lower low here on Amazon. So it does look like we have more of a bear flag continuation pattern happening where we already see that break and confirmation lower. If our 3088 breaks, look for next support again at 2992, 3000. Whole psychological number. Anything underneath is going to be our triple bottom in this area of the chart from 29.23.22. Underneath that, previous breakout level from in here could be in play at 27.81. To the upside, if we get any sort of miraculous bounce out of here and negate this bear flag pattern, then we're looking at a retest of our 32.45. Anything above that, you can tell that there's quite a few choppy levels, a lot of resistance overhead based on, some resistance in here, previous all-time high, and then some rejection in this area of the chart as well. The highest one in there is at 33.83. That would ultimately be, I would watch for some chop to happen before that, but if we get all the way in there, that could be a strong area of resistance on the Amazon chart. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know by leaving a comment down below or simply leaving the video a thumbs up. If you know a friend or any other trader who might benefit by hearing this type of information, feel free to share it along with them. And with that, I wish you a green trading week.